Green technology, carbon trading, this was the biggest story in the world as part of global warming 3 years ago. But then the global financial crisis happened and the story has somewhat gone off the front pages. And of course, in the days since the problems in Greece became apparent, you'd be lucky to find the story on page 20. Now, Professor Michael Tamvakis has been following this whole story all the way through and joins us today. Michael, has this story really disappeared, or is it just as important as it ever was?
It hasn't really gone away. It lost some momentum because the world financial crisis and the reduction in production meant that less economic activity produced less CO2 emissions. But now world production, particularly in emerging markets, has returned. The economy is doing reasonably well. CO2 emissions are up. They become a problem again. We now know already that for 2010, CO2 global emissions were up. And I believe that the market is becoming again quite interesting, and the issue is re-emerging quite acutely.
But even if this story is re-emerging, are we ever going to care about it in the way that we did in the boom times?
I think we are, for a number of reasons. First of all, because of all the effects it has on climate, and this is very obvious with lots of commodities these days, not just energy commodities, agricultural commodities, and the food prices have been affected intensely. Also, what we have at the same time is quite a high price of oil. In the last 6 or so months, the price of oil has remained consistently above $100, which means the momentum for new renewable technologies is maintained, and this coupled with the fact that hopefully the price of carbon is going to start increasing at more reasonable levels beyond the 15 euros per ton, then I think we will have quite an interesting market, and a lot of people will start taking interest in it.
So what should markets or governments be doing about this?
I think, first of all, on a more global basis, a lot more should be done in terms of trying to raise awareness and also putting in systems in place, market systems, market mechanisms. Right now, the only functioning market for carbon that we have is the EU. There's a vast market there in the United States, in North America in general. There's obviously a vast market that can be tapped in the emerging economies that produce quite a lot of CO2. And right now we have very little. Whether it is a carbon tax, which the government levies, or whether it is an actual carbon trading system, I think this market-related mechanisms need to be put in place. And there is some hope coming from the American market because there's a lot more emerging in terms of voluntary scheme happening in various states around the US, particularly in the northeast of the US. So it's going to be very interesting to observe what they will have to do.
The time to buy into something is when it's out of fashion, and because of events in Greece and the Eurozone, carbon trading and the like are very out of fashion. Are there investments that I could make today that might make me very rich in years to come?
I think the whole idea of buying low, although it is not a common commodity, CO2, because it is normally linked to industrial concerns that emit it, I guess you can always buy and hold it and hope that you're going to sell at some time in the future. But it is not as straightforward as, for example, buying crude oil or pork bellies or whatever else for that matter. I would go in, I guess, as an investor, possibly in projects which can then be used to offset CO2 emissions by, for example, large factories and so on in Europe or other parts of the world. And certainly, I would be very much interested in anything that has to do with renewable energy. I think this is pretty much the future. There's been quite a lot of momentum now, particularly post-Fukushima, because a lot more people are getting very edgy about the use of nuclear, so they're refocusing, if you like, their interest on renewables once again. Now, the events in Greece are interesting, and without wanting to comment on specific events, what they do cause is quite a lot of jitters in the oil price and as well as in the equity market. But obviously the two are linked. If, for whatever reason, there is a default and the Eurozone goes into free fall, it takes away quite a substantial part of world production, and this has an immediate impact on the price of oil, pushing it downwards. If the problem is resolved, or at least we find a steady state, it means that we keep the small but regular economic growth of, for example, the Eurozone and associated with that possibly the North American economy, and then we can rely on the emerging economies to push, to give economic growth.
Michael, I know your roots are in Greece. I have to ask you in 20 seconds, is the situation there going to sort out?
Personally, I think yes, but it is not something that's going to be sorted out in 6 months or a year and a year and a half. We're talking about 5 to 10 years, because it is not just a matter of refinancing the debt, it's a matter of changing attitudes in actually the whole Greek society.
Professor Michael Tamvakis, thank you very much.